S&P tries to stage a rally today. Got up a little bit on the bar. I like the fact that you're up over 50%. Candidly, you had some pretty light volume on the day. This going into it doesn't even come close to what we did on Friday. You're still below the 55, the 22, the 12 is screaming down. I use a 12, a 22, and a 55. You should use what you're comfortable with. You have some data that came out that I think is pertinent to go over, specifically micro data, and we're going to get to it. But is this something that I should be doing cartwheels about? Not really, no. I think you're going to have some light volume until CPI. We're going to have to talk about that and how I think that's actually setting up. What I do think you're doing here is I do think you're getting wedged in. And I think people are getting a little sucked into this as if CPI is going to miraculously be great and then go from there. Now, I have my own beliefs on CPI. I'll go through it a little bit tonight so that we're prepped. If you look at that break right into there, you haven't even rallied back to that. That would take you to the 55. You have a lot of work to do here. So this move is something that's great, but is it something that I have to do cartwheels about? And the answer is no, it's not. Matter of fact, it's something that kind of puts me on my heels. I would rather have had a flush, gotten everybody out of the way, and then rebuilt. And that's not what we got. Now, if we went through this on the weekly, and what we'll do is we'll clean this all off and just drop to a plain chart, clean all this off, and you can see real clear, you didn't really do anything. You kind of went sideways at best compared to where you were on the week. And I understand it's just beginning, but the majority of this damage was Friday, and it kind of puts it into perspective what really happened at the end of the week there. So I don't really see the sense in getting too crazy or getting too excited about what we're seeing here. If we look at the NQ, you're pretty much seeing the same exact thing. You're actually seeing it a little worse because you have the lower highs right here, and I think that's definitely something for us to look at as well. I just don't feel it yet, and I think you have to kind of just look at what the charts are telling you. You have a declining 55, 22, and 12. Do you really want to be that guy that's sitting there trying to pick off the bottom? Now, that's going to put us in an odd position because I don't think you want to be that person. But if everything's declining and I'm not going to get above anything, the very first thing I always do is start looking, saying, okay, am I above anything? And the answer is yes. You're starting to get above, or you're trying to get above the 5. On the futures market, you are getting above that. You have a 3-5 cross. You had one here too. You went through it. I'm not going to get too excited until these all invert. When they start inverting and lining up, very similar to how you are here, but inverted, right, where the green is on top. Green means go, and you can start seeing that when they flip like that. It usually gives me some kind of signal, and it's not really that hard to see. If I go here and click on this for a second, I just hit hide. I can move everything. And you can just kind of see how that works, where once this one takes top position, which is the 3, the 5, and the 8, I get a completely different outlook on the chart, and the chart changes. In between this, you're getting a bunch of noise. Maybe it's going to go, maybe it's not. And then it finally goes. So the idea of looking at it here, and sometimes I'll do this, I'll just get rid of it just to look at what's really going on to get rid of some of the noise. So for me, looking at that, it's not something that I can really just, get all giddy about or get excited about. Do you come out there and say, oh, well, we're holding this level? Are you going to hold that level depending upon what CPI does, PPI does? I don't know the answer to that. Now, you did get some good news, and you needed it after what happened with Apple today, in my opinion anyway. But if we were to look at this and just, again, go to a plain chart, you're kind of wedged in there. I mean, you're not really doing anything except getting to the top of this and then saying, okay, well, we're feeling good about ourselves because we didn't go down, but you're losing megatech, and people really aren't getting that yet. I think they're going to as the week progresses. Doesn't mean you can't rally, but we need to go through some of this. So let's start with Apple. Was there anything new about their phone, or was it the same phone as always? It was pretty much the same deal, which was extremely disappointing. And I think that's something that we really have to focus on here. So do I care about this? I kind of do. I kind of like these kinds of patterns. If you have these dragonflies and you can flip. My issue with it is this. I'm sitting right at that 55. Do I want to be first guy in because you're moving after hours because somebody else had good earnings? Probably not. I probably don't want to do that. So it's something there where I think I'm just better off just candidly staying out of the way, letting this play itself out, and kind of going from there. I don't see a reason that I have to get in there. I see nothing that is going to convince me that I need to get involved with it. The majority of it's moving because of Oracle, which we're going to get into in a second, which had a really good quarter and is absolutely crushing. But in regards to Apple, was there anything earth-shattering? I'm sure you're going to have all these guys out there talk about the new, red color and how exciting it is for their new phone, and this time it's going to have this super jack, and the new watch can do this. It was a non-event, complete, utter non-event. I really wish I had something more positive to say about it, but it was very disappointing. And I'm surprised that the stock, I mean, maybe the expectations were so low because the stock went, and that's all I can really think. Now, in regards to Oracle, Oracle crushed, and they crushed in a good way, but let's go through here and just go through the basics. So 139, we were looking for 132, and then you can see how we're rallying over the 13.3 versus 13.2. Most important part of this that's not reflective is that their cloud business grew at over 45% year over year. It's pretty substantial. They talked about the hundreds of acres of farms they have with NVIDIA chips in them. I think this is pretty powerful stuff. And the stock's responding after hours fairly nicely. And we just see it right here. I actually did a trade on this after hours on just a little move, but we haven't even had the conference call yet, so you just don't know. But you can just kind of see the patterns here. These patterns, when you start to see them, they're everywhere. They're just very simple 3-bar patterns. And you can see it right here. Breaks out, 2, 3, goes, retest, and then goes again. You just kind of keep moving your stop up on these things, which is probably not the worst idea. You watch it break, you're watching these retests, and the question is, where does it end? Well, you have blue skies above you, so things like this, does somebody say something on the call that's troubling? I have no idea. I'm not on the call, and the call hasn't even started yet. But overall, I thought it was good. Now, on a weekly chart, this is what you look like. I'll clean off all my levels, but that's what you look like on a weekly. So you're breaking out and hitting highs after hours. This is going to move some names tomorrow, I think, depending if they don't screw up the conference call. So you're already seeing some love in NVIDIA. You were seeing a little bit more. I'm surprised that you're not up more at this time. I would think that you would be, all things considered. I was watching this FNGU, which candidly I have a short on right now, and I'm really not very concerned about it at all. And I think you kind of have to take a step back on some of this stuff and look at what's really going on. There are sectors that are breaking out. We're going to get into those. But should I really be worried about being short big tech here? Probably not. It depends on your time frame, right? And this is pretty much a large swing trade for me. Do I really need to worry about this? I don't think so. I think that this, like something like FNGU, can easily come back and retest this level. I'm not really sure what the impetus is going to be that's going to get us higher going into CPI. I'm really not. And we're going to walk through a little bit of that. And we'll do more tomorrow. But I want to give you an idea of how I look at the landscape and what's going on out there. But I don't see the big hurry here to just be technical. When I always look at things, for those that are new, I look at things from a macro, then a fundamental standpoint. And then, of course, you always want to look from a technical position as well, right? And what that really does tell you is the what, who, when. So what is really what happens on the macro, who's affected by the macro, when tells you when you should enter. If you think about it that way, it'll make your life a lot easier versus just looking at a chart and thinking that you're supposed to know what's going to happen, right? Just use the chart as the trigger based upon the event. Makes life a lot easier, right? Triggering event, and then you just look for when to pull the trigger. If you think about it that way, it makes a heck of a lot. But if you see something like this on FNGU, what's going to be my impetus here to get out of my own way? I don't see it yet. And, nothing would make me happier than for tech to go higher because it's much easier to trade tech on the upside. Now, is Oracle going to do that, or is Oracle going to move Oracle? We'll see. CRM had a great quarter, absolute blowout quarter, and then we gapped up, and then by the end of the day, you were down about $20, and you've done nothing but trade down. So, we'll see. We'll see how this goes. And it was a really good quarter for them too. But we'll see how this goes. I mean, this was a blowout, and then we went sideways, blowout, sideways, and each one of these was what? New highs, new highs, new highs, and then sideways. So I don't know. I don't know that you're going to get that institutional support with what you have going on this week, and we're about to find that out. There's some other things going on after hours as well. I should probably just go through a couple of them, like HIMS. There's a shelf offering out there. Candidly, this doesn't really bode well for the company. You did earnings here, you ran up, and you didn't do a shelf offer. And now you're doing a shelf offering? But it doesn't really ring very good. I mean, I don't know how another way to say it besides it does not ring very good. That's not what you want to see here, guys. So I'm somewhat surprised by that, to say the least. I think you need to see how this is going to play out. Candidly, after hours, I have a little short position on here, and I do think that you could run into some issues. But, we'll see how that plays out. The big thing is obviously going to be Oracle's conference call at 5 p.m., and this was before that. Let's close that and keep rocking and rolling. Let's get rid of Apple and its lack of originality. And let's just look at NQ and what you're dealing with. I think you need to be really careful here until you get some more data. One of the things is if you take the peak, you drop the anchored VWAP, you're nowhere near point of control or any of this. And people will say, oh, well, you're so far off, you could still have trades. 100%. I'm not saying you're going straight down. I'm far from it. I think you can rally and then we'll go from there. But I think people need to be careful that the air is going to get sucked out of these moves faster than they think. That's where my concern is, because you are seeing a massive rotation. You might not be seeing it. You might be looking at XLK and going, oh, that's hanging in there. That's nothing compared to what some of these sectors are doing. They're blowing out. And I'll show you some in a second here as we keep going. Boeing, I think we'd be remiss to not talk about this. contract that they have and how that's going. You're seeing that move sideways. And I think the micro moves is really what I'm focused on tonight. So they got their contract with the union. Did it really do anything? No, not really. They basically trap people for the day, and that's about it. That's really all you have there. I do think it's interesting that if you look at the XLI names, they broke out here only to reset. Same thing with XLF. You broke out only to reset. So that's not really what you want to see before CPI and PPI. And we're going to go through that. But I do think that the market's already telling you something. When you start looking at what the bond market's doing, right? The bond market, it's just, they're rocking and rolling. You start looking at things like IEF. These things look like they're going to break out. HYG. I keep going through the same names over and over again, and all they do is go higher, right? So when you start to see these names, looks like that MO is going to hold here as well. When you start to look at these names, you start to see a very specific pattern that I think is important. Let's get rid of this one as well. And we'll go through some of these indexes, but I want to focus on some key things that are going on here that I think would be extremely helpful. So XLRE, do yourself a favor tonight. Go look it up what the holdings are. Some of these holdings are hitting all-time highs. We're sitting here trading tech stocks, and some of these things look like they're ready to rip. Go look at this on a weekly basis and look at this. I mean, it's perfect. Ever since this news came out, right around July 11th, when we know what this news was again, that we had a negative what? What happened here? We had a negative month-over-month CPI when we were supposed to have a positive CPI. And I'm going to walk you through my funny math, and then we can kind of go from there. You can see how I look at the world, and it's usually fairly, in my opinion, fairly accurate. Last time it was way lower than I thought it was going to be. But this is something you have to look at. And you kind of have to go through some of the defensive ones and start looking at them and going, XLP's breaking up, okay? Straight up. I mean, 66 to 107 since October. Haven't lost a night of sleep. Procter & Gamble's on a tear. Like, these names are just ripping. There's not a care in the world about them. You're seeing Clorox break out. It's telling you where the money's going, okay? It's showing you that they are getting out of tech, and this is where they are going. And they're really getting out of Google. Google is completely broken, in my opinion, and let's go through this. But, you needed to hold here, and you were unable to. So this actually becomes a perma short now, in my opinion. I'll show you why. But when you start breaking key support levels like that, you just put the shorts on and leave them alone and just keep looking at them for longer term trades. That's really what I do. I mean, one of my key short-term trades to short that has done exceptionally well over time is one of the simplest things in the world. Confirm move after breaking the 200-day moving average. If I get a confirm move after the 200-day moving average, if you take a look at this over and over and over again through time, either way, they work. They work pretty clean. So, I mean, we can just keep going back all the way, but we can go back to the pandemic and just see it. Breaks, goes lower, breaks to the upside, goes back, retest, goes, breaks lower, goes, over, goes. I mean, you can see it. You might not make the most on some of these like reverse moves. And sometimes you're just going to get the flim flam. I mean, it's the game, right? Breaks, retest, goes. But even here, what you're seeing is exactly what you want, right? Where you look for something like this and it's like, okay, like let's just say for sake of argument that you were using something like that. Wow, that got weird there. I don't have time to edit. They gave me a meme for that, for saying I should go. Anyway, you see how you undercut here and you're like, oh, I'm always looking for the lower low follow. So on something like this, I actually even wouldn't have done it. I don't have the follow through. I close below it. I'm green. There's no lower low follow through. I wouldn't have done it. I may have even looked at the flip and then gone from there. I actually think we did look at this back in the day when you had AI and it was promising. And now, nobody's apparently using ChatGPT, which I'm not really buying, but this is moving because the Department of Justice says, we'll get back to you in December and tell you exactly what we're going to do. And the reason for that, obviously, is what? What do you think the reason for that is? Let's be cynical and talk about the election, so they don't want to upset Google ahead of it, right? So it is what it is. And then we're going to see where we are. Just put our tinfoil hats on. But the lower low there, the break of that weekly, there's very little to say here about this. This is, to me, it's a perma short. Wake me up, if it gets back over the 200-day moving average. Other than that, these kinds of trades, if you just look at something like this and thought about it from that perspective, yeah, you're going to have your times you're going to get stopped out. There's also the times when you're going to catch something where you're going to catch a good 40, 50 points. So it's much more longer term to me to do something like this, but it's on like Donkey Kong. So we'll see what happens with that. Do the kids still say that? PLTR. I'm really surprised by this. We have a position in this. And we're doing very well with it. Not surprised that we're doing well in a position. I'm very surprised that you held because Dell did not. So now who's buying this, right? It's retail. The majority of this could be retail, but is it really retail or is it undervalued by institution? So this is what I'm trying to wrap my mind around. Now, if I look at this, that's a lot of volume. It's 150 million shares. So maybe the reason that PLTR stayed up is because institutions are underweight PLTR, and then they have to go and put this on, versus Dell, which they were probably overweight on and went nowhere. Right? I actually shorted this today. It was probably one of the most boringest shorts I've ever had in 25 years of trading. So, but if I take a look at something like the PLTR and we see how that's going, that's a move. That's impressive. And I mean, I'm happy that I own it, but your stop's pretty simple. I mean, everybody can see where your stop would be. When you look at stuff like this, you really want to pay attention to it. I'm very surprised. And I'd watch this weekly chart. You can see there's a ton of like micro stuff to go over before we even get into some of the macro issues that are going on out there. So I want to go through X here, and you can see you're up another $1. You had a couple upgrades today, guys. I have a very tough time. I'm just going to say it again. You're in an election year. The goal of everyone that's gets elected is to stay elected. You don't go into Pennsylvania and fight the CEO of Pittsburgh and basically put him where he's saying we're going to lose jobs. So they're going to do something. Shapiro's already on it. What that something is remains to be seen. My position on this has been relatively simple. Long, and then I just have puts underneath of it, married to it, in case it goes the other way against me. It hasn't really been going the other way against me. After hours, you're up a full $1. I think my average cost on half this trade's like $29, 29 and change. You're just not going to not get something done. The other thing is CLF is at 35. Their offer was 35. Nippon's at 48. You could see some kind of split deal or something, but to think that they're not going to try to figure something out into November and leave this hanging and then just allow their opponent to use it and their face over and over and over again, I have a tough time believing that. I really do. These, no matter what side of the aisle you're on, we all know that they love power. So I think 35, 36. Now, if you go out there, get a couple today. JP Morgan upgraded it, $42 target. They're probably not part of the IB, and that's investment bank, so that they're able to do it. And then I think it's JLG did it too, right? JLG is actually a research house, and that's all they do is research. There's no IB or anything like that. So that's pretty interesting that they came out and did that as well. But they're at like 38. And I think it makes sense. So I have a position in it. I like it a lot. I think this is just a no-brainer for something to get done before November, especially with Pennsylvania being a swing state and the amount of animosity that's going on with this particular deal and being a talking point. I think that they're going to use it that way. I truly do. Let's get to some data here before we get into some of the nitty-gritty that I think is important. So if we take a look here, these are stocks above certain moving averages, and they tell you exactly where you need to be and what you need to be doing as far as where are we, as far as overbought or oversold. So on the 5-day, that's really your short term. When you get down to that 2 or 3 level, you usually bounce, and you can go do yourself a favor and just go and take a look at what happened in May, go look at what happened in mid-April, and you'll see when these bounces actually kick in when you're over those percentages. And here's all the symbols, and I look at it like this. Why? Because it's easy to just look at all 4. All I need is the number and to see how you're going. And you can see this pretty clearly as well. You're down to 45. Really trough levels for something like this, if you take a look at November, is down to that 3 or 4. That's like absolute puke level. Last pullback that we had was April 17th, and you got down to a 10. You're at a 43. So there's more pain out there, in my opinion. But that doesn't mean you can't have a little snapback and then roll. Have a snapback and then roll. And that's how people need to look at this. Again, if you go back to taking a look at where you were in August or some of these other levels like April, you're at 62. Do you have to stay here? Not really. But you look here, you were in April. You're down to 25. Where are you right here on the 50-day, right? You're at 58. You're not exactly falling out of bed, guys. And I think that's a really important distinction here. But I really want to hammer this home. I think that the way that I looked at it was the correlation was the way to go. But what I'm seeing is I'm seeing the moves, not in the correlation. I'm seeing it in the individual names, and that's why I spent time on it. I think you have another day or two here. Now, what's interesting about this is you flush tomorrow and you go into Wednesday, and we should talk about CPI. Now, on Wednesday, we're going to get a lot of data, but the most important data for us is going to be for me anyway, it's really going to be the CPI data, and I think we have to focus on that for a second here. And I'm just going to show you how I look at it. You can see here at 830 month over month, and this is core. And you can see where you're at and how it's been, all over the place, right? And we know that that's going to be an issue. We go here and take a look at the month over month, and we can see July and when it was negative, and then we went positive, and now we're coming up with a forecast here again that we're supposed to be positive. This is kind of where it gets weird. So I'm not really sure how the year over year is going to stay up and the inflation is going to drop the way that they're suggesting. But this, to me, could set up for lower than expected. You never know how they're going to play with this, but let's get into it. So the easiest thing for me to explain is that this data, if you watch non-farm payrolls, can be manipulated. But let's just pretend for a moment that it's not. And let's take a look at crude oil and realize that crude's in there. If we go from something like a June 1st, right, to a June 30th, which will take you right here roughly, and you see how you're up during this period. And then we go into July's data and then we're negative, which doesn't make any sense on July 11th. It makes zero sense that crude's up and then we're down. But if we take a look at crude here and we go over from this date and then we go all the way over to here and we look at August, we would all agree that crude was down for the month, right? Like we can all agree on that. It was down about 8%. So the fact that CPI miraculously was not reflective of that makes the data to me suspect. And I think you should have a suspect outlook on all data that you're seeing right now, personally. Now, if we look here, we're going to see that in line, we're basically in line to down on crude. But another way to look at this is to go here and just take a VWAP and go, all right, so if I took a look at June and I went all the way out to the date and just looked at it on an average basis, you're right here, okay, on crude, roughly right in this area. On your average cost, 79. And then if we went here and we took it from July 1st over, right? So what we're doing is just looking month over month at something that's in everything, and you get roughly the same price, okay? And then what you do is you go all the way to August 1st, which is right here, and you see the drop, the average drop between here, between 77 and here on the average price to 74. You have a 5% difference on average during the day or during the month on oil. I don't know how that's not going to be reflective in CPI because everything drops in cost because everything's related to gas. I know people will say, well, what about core? Because core takes food and energy out. You still have to transport stuff, right? And that leads you to something like this where you're looking at gasoline futures. I've done this for some time and it usually gives me a really clear indication. Last time it did not. I want to be real clear about that. It did not give me a real clear indication. It makes me think that maybe they're, let's just call it putting their finger on the scale like they do when you try to buy lunch meat. Do they still buy lunch meat? So when you look at June and how June's going right here, right? And then you would go to July 1st and you'd go, okay. And you'd see that, well, for that period of time, we're right in the same area. And now watch when you just go to August 1st, okay? The difference in gas is between $2.30 to $2.18. How is that price point, the difference between these two, not going to be reflective into the CPI? I don't know, but they're not reflecting it at all in CPI. The other thing that they're not really reflecting are car prices. Now we could argue this is Manheim used vehicle value, and this shows when people go to the auction what they're paying. And this is reflective in the number. And I know people are going to say housing, and I get it, but if you look at the housing data, rents are actually coming down. So, all right, so is this enough that got us last time because this is last month's data? Is that enough that's going to be reflective in the car data? Maybe, but it wasn't reflective before. So I've got a lot of conflicting data, but if I had to lean one way or another, if CPI is really weak, then it's going to be more pressure on the market.